What is happening? What's popping, guys? It's your boy E, aka Frugality FX. So in this video, I'm going to show you how to trade supply and demand. We're going to be focusing a little bit on candlestick patterns, candlestick formations, and trend formations and trend patterns. Okay. So firstly, you need to watch the previous two videos in order to understand what's happening in this video right now. So before watching this video, go watch the previous two videos. This is the third video, right? So let's go. Let me first show you what's a candlestick. I'll be explaining from the basic, right? So you get different kind of candlesticks. There's so many types of candlesticks. So if you get a candlestick like this candlestick right here, we call it a Marubotu candlestick. It's a full momentum candlestick. It's called Marubotu. It does not come with a wick on the top or the bottom, it just comes with the real body. But before that, let me explain to you what a candlestick is exactly. Okay. I'm gonna go a little bit into details and just show you exactly what I'm trying to explain. Okay. So we need to know what a candlestick is, before talking about it. We need to know what a candlestick is before talking about it. Okay. So this is called a wick, right? This is called a wick. It's called a wick. Right, a wick. Okay. That's a wick. It's called a wick. And this is called a candlestick real body. Candlestick real body. Okay. We'll call it candlestick body. This is what I'm talking about right here. It's candlestick body. If this candlestick is green, if this candlestick is a green candlestick, then of course we have this could be our closing price. Candlestick close. Candlestick open. Open price. Okay. And then here we're having I think it's a lower shadow or whatever. Lower price and lower shadow. That simply means that the price candlestick opened right here. Candlestick opens here, then it dropped all the way down to the lower shadow, retraced, and it went all the way up to this level, retraced, and it closed here. That's why it is green. But if it's a red candlestick, if the candlestick is red, then we'll be looking at something like this. If the candlestick is red, then it's a bearish candlestick. Okay. If it's a bearish candlestick, then the open price will be here, and then the close price will be here, because it is a downward market. It opened up, it went all the way up, it traced down all the way below, then it closed down here. That's why it is red. Okay. So then we're talking about different kind of candlesticks. This is called a full momentum candle, Marubotu. And then this one is called a Doji. We need the candlestick to be more right here. With this, it will be called a Doji. A Doji candlestick pattern is an indecision candlestick, right? It's when the sellers and the buyers are fighting to go up and down and close nearly the same price, right? Then you remove this. You remove that, and then the candlestick got a wick on top. It's showing that the pressures of it's showing what? Downward momentum, downward pressure. It shows you that the buyers went in, by the way, take down by the sellers, and the price was pushed down below the opening price. So now the price is below the opening price because it closed below, right? And if this wick was on the bottom like that, then this candlestick will be a green candlestick. Why? Because it's showing bullish momentum. So the close will be on top, and the open will be on the bottom. Delete that. Delete that. So the opening price will be on the bottom, and the closing price will be on top, because it will be called a what? A dragonfly doji. Dragonfly doji signifies that the market is going up. It's a bullish reversal or bullish continuation candlestick, because the pressure is coming from the. It shows that the sellers were there, they pushed the market down, but they were taken down by the buyers, and they pushed all the way price up, and it closed above the opening price. So the market closed above the opening price. Something like this. So this candlestick, looking at here, we are the sellers running the market all the way down, and then we're then engulfing. This is called a bullish engulfing pattern, right? Bullish engulfing candle. That's a bullish engulfing candle right here. It's basically just show that the market is what is changing momentum, and the market buyers are taking over right here. And this is what a dragonfly doji. Dragonfly doji. Doji. A bullish dragonfly doji. And there we go. There we go. It's the same kind of candlestick. It's the same candlestick. Or we can call it a bullish pin bar. Bullish pin bar. If you want to learn more about this, then you gotta do the course, man. We got a bullish pin bar right here, and that's a bearish pin bar. Just explained it before. We call it a dragonfly doji and a gravestone. I'm gonna show how a gravestone look like. Gravestone candlestick. Gravestone candlestick. There we go. There we go. There is the gravestone right there. It's exactly what I explained. There is the gravestone right there. And then if we put the wick on top of the gravestone. And then this I say does a marubotsu, a full momentum candle. A marubotsu is a full momentum candle. Right? It's called a marubotsu. Marubotsu candle. Right, there we go. See, that's a full momentum candle. It's a bullish marubotsu, and you get a bearish marubotsu. But in this case, we're talking about a bullish marubotsu. It's a green candlestick. So enough of the candlesticks. Let's go deep to what I'm talking about, supply and demand. I want to show you guys how we trade supply and demand. So let's say we have a demand, which supply, which is a resistance level right here. And then we have a demand, which is a support level right here. And then of course you get the market trending. We get the market trending. We get the market trending right there. What are we looking for? Based on the previous videos, we're looking for a breakout below the line. Because now we're trading what? trends in trends. We're trading trends in trends. Because in the previous videos, we basically explained that you can see the market is moving sideways, but with a ascending channel inside a sideways market. That's what we call a reversal market. So basically what we're looking for is a breakout to the downside, a retest, and a continuation. Something like this. We'll be then looking for something like this. There we go. We're looking for something like that. In the market, gotta always respect the levels of resistance. Okay. So let's take it to the actual chart and I'll show you exactly what I'm talking about. Let me remove everything. Let me remove everything. I'm gonna show you how we trade support and resistance of supply and demand. Okay. It's gonna be crazy. It's gonna be crazy. Let's take it from here. So what we're looking for, we know that this is a supply and demand level, right? What are we looking for? We're looking for the market to then break inside the channel, retest, and then we continue to sell. And from the support, we're gonna go back up. So it's also trends in trends. We have a rising channel in a sideways market. With the impulse to the downside, with the impulse to the downside, then with a correction, the next move should be an impulse to the downside. That's a 90% rule. It's nature's theory. Okay. Let's see what the market did. Okay, we're breaking out, retesting the level. Okay, we're still in. I want to get into this channel that we're looking for sales. Not there yet. Okay, it's a double top. There we go. So what do we do with short market right here? We sell it when it breaks here. And then we'll take profits all the way down here. Stop loss, but just above the previous side. How big is the first again? It's a nice 1 to 3 years forward, if not 1 to 4. Let's go. See what the market did. Clean retest. And a continuation. Oh shit, take profit smashed. We smashed the tech profit already. We smashed the tech profit already. So if we smash the tech profit, we should be then in on a what? A buying trend. Really long here. We go buy here. That's how you're trading supply and demand. We buy here. And we target the previous resistance. Let's go. Let's see what the market did. We're really deep in profits right here. We're deep in profits. Very deep in profits. All we're waiting for is to either take profit and get another trade or another selling trade. So now we even move our stop loss somewhere around up here to trail stop. So on the market stop, oh, take profit smashed, take profit smashed, take profit smashed. So what do? We need to be technical. Remember, we're watching this chart. We're just not gonna enter the sell. We're watching the chart. But we know the nature's theory that this was an impulse. This was an impulse. So we had an impulsive move to the downside, and then we're in a correction, waiting for the next impulse to the downside. So let's see what the market did. Boom. So I would have gotten in down here because it's another bearish setup. It's another bearish setup. Candlestick patterns the high wave. It's a form of exhaustion. The bulls lost momentum, so the bears are taking over. Stop loss, we still keep it what? Above the previous high. It's a short and not a long. Out here. So let's see what the market did. We have a lower high, and we break below the structure retest, and we just continue waiting to the downside. That is beautiful. That's a nice structure. That's a beautiful structure. Retesting the trend line. I could have put more sells. I would have placed much more trades. Because this correction is also forming for correction. We've not yet touched the stop loss. We're far from our stop loss. If we don't want to hit the stop loss anyway. Of course, with the strategy, we're not going to hit the stop loss. We're still in profits. Very well in profits. We're going very well in profits. Dip. The market is just giving us pips, and we're just eating. We're just eating pips, a lot of pips. With trends and trends, impulse correction, another impulse. Coming for correction before the impulse. So we're just eating pips, man. You can do this all day, every day. These are drawdowns as part of market behavior. The market doesn't move one direction, it moves in zigzags, you know. So there's no way we can expect the market to move in one line. It's called a trend. It creates a series of highs and lows. You get higher highs, get higher lows. And we see going deep in profits. Take profit smash. Take profit is smashed. Okay. Boom. We're out of the trade. Made a lot of profit. And then we're gonna put a buy trade based on the bullish engulfing on the level of support. We have a bullish engulfing pattern on the level of support, which is a sign of reversal. Momentum loss for the bears, and the bulls took over. For the bears, lost momentum, the bulls took over. This candle literally engulfed the previous 5 or 4 candles, red candlesticks, clearly showing that the bulls have taken over. And that allows us to enter a long trade, long position trade. We're going to enter right here, anticipating an inverted head and shoulders in a continuation to the upside. Right? So we're anticipating an inverted head and shoulders. We have left shoulder, we have a head, anticipating the other shoulder here before the continuation to the upside. Okay, let's watch what the market did. Okay, and it is head and shoulder. Oh, clean. That's clean. It is clean. We still not. We haven't hit a stop loss yet. It is just a drawdown. There's no hit stop loss. We're still in the profits. Double bottom. Clean. Clean. We're going up in profits. Up in profits. Up in profits. We're downloading dollars out here. We're downloading dollars out here. That's very good. That is very good. It's a patience game. You gotta wait. You gotta keep waiting and just wait. Just keep waiting and wait. As long as the trade is still running, you just keep waiting. And we're deep in profits. Way deep in profits. This is sick. I could do this all day, every day. Because you broken the structure. Expanding channel is broken. And the market is just doing its thing. Creating series of higher highs and higher lows. Showing us a strong uptrend. This is beautiful. This is very beautiful. Still holding the structure in here. We have a series of trends inside trends. That is just how the market moves. I could do this all day, every day. I don't want to make the video too long, so it's your boy E signing out.